You don't want to commit cash. You don't want a bond. You want stocks. You want gold. You want tangible assets. You want real estate. Ray Dalio. I will say this about gold. If you took all the gold in the world, it would roughly make a cube 67 feet on a side. Now for that same cube of gold, it would be worth at today's market prices about $7 trillion. That's probably about a third of the value of all the stocks in the United States. For $7 trillion, you could have all the farmland in the United States. You could have about 7 Exxon Mobils, and you could have $1 trillion of walking around money. And if you offer me the choice of looking at some 67-foot cube of gold and looking at it all day, and, me touching it and fondling it occasionally, call me crazy, but I'd take that farmland and the Exxon Mobils. Warren Buffett. Ray Dalio and Warren Buffett are two people to follow if you want to learn how to invest from the best. They've both accumulated multi-billion-dollar personal fortunes through their decades-long successful investment careers. But the fact is that Buffett and Dalio have very different approaches to investing. However, taking a broad view of their differences can help you see your own investing strategy from a new angle. Buffett and Dalio have their own opinions about gold, and they are once more basically in opposition to one another. According to Buffett, gold is useless, and it simply sits there looking beautiful while you look at it and it gazes back at you. He once had this to say about the precious metal. I have no views as to where it will be, but the one thing I can tell you is it won't do anything between now and then except look at you. Whereas, Coca-Cola will be making money, and I think Wells Fargo will be making a lot of money, and there will be a lot. And it's a lot. It's a lot better to have a goose that keeps laying eggs than a goose that just sits there and eats insurance and storage and a few things like that. Rather, the value investor favors silver. According to him, it's far more industrially used than gold and serves a very similar purpose in a portfolio. On the other hand, Dalio has consistently advised having some exposure to gold in everyone's portfolio. We can now understand why, as a gold bull run that began in mid-2019 has provided anxious investors with a place to hide if they want to wait out the storm without losing out on returns. Dalio has long invested in gold. In the second quarter of 2020, his hedge fund Bridgewater invested more than $400 million in the metal. Additionally, he stated in 2019 that adding gold to a portfolio can help maintain balance because it can lower risk and boost returns. Dalio finds holding valuable assets like gold to be more alluring because he views it as a built-in inflation hedge. Even though the billionaire investor acknowledged owning a very small amount of Bitcoin, he said if he had to choose between gold and the alternative, gold would be his preferred option. If you put a gun to my head and say I can only have one, I'll choose gold. Ray Dalio. Also, gold has been for many thousands of years universally recognized as a source of money and central banks. It's the third largest source of money in the central bank reserves, and I don't think Bitcoin is going to serve those types of purposes and so on. So for various reasons, I prefer gold to the other, but it's a little bit part of my mix. Ray Dalio. One thing is clear from these financial experts' divergent viewpoints. There isn't a single correct approach to investing. Is Warren Buffett a good investor? Yes, of course. Is Dalio an excellent investor? Without a doubt, everyone knows that. However, the contrasting opinions of the two most popular investors may create confusion, causing investors to make choices that are not best for the long-term performance of their portfolios. The key is to have an investment strategy that's compatible with your knowledge and objectives. If you follow through with that and maintain consistency, you'll eventually build wealth. Carry out your own research, make your own decisions, take in what is helpful, throw out what isn't, and add what is wholly your own, as the late Bruce Lee famously advised. It is, after all, your money. If you want more investment advice from financial experts, then subscribe to our channel and check out our other videos. Thanks again, and we'll see you in the next one.